Do you want to maximize your success with NCUA? Join Mark Treichel as he shares with you the insider's view on passing your exam with flying colors. The With Flying Colors podcast is sponsored by Credit Union Exam Solutions by Mark Treichel. If you would like to work directly with the Credit Union Exam Solutions team and receive support to optimize your results with NCUA so you save time and money, visit us at marktreichel.com to find out more.
Hey, this is Mark Treichel with another episode of With Flying Colors. The FTX fiasco is amazingly interesting. It's kind of like driving by a crash on the highway, and you hope that nobody you know was involved and lost any money or lost any lives. But there's a wonderful quote by billionaire Warren Buffett, who said, "Only when the tide goes out do you discover who's been swimming naked." Well, that quote's been used a lot on different articles and different podcasts and different news articles that I've seen relative to this FTX situation. But today I want to talk about reputation risk and offering crypto to your members. So there's an article in American Banker dated yesterday by Claire Williams, and I would like to discuss the contents of that letter here on this podcast. The article is called FDIC, quote, looking closely, unquote, at Farmington State Bank in the FTX fiasco. The Federal Deposit Insurance Corporation and the Federal Reserve are looking closely at Farmington State Bank, a small bank connected to the failed crypto exchange FTX, according to acting FDIC Chair Marty Grunberg. FTX's bankruptcy documents have revealed that Alameda Research, a hedge fund affiliated with the exchange, invested $11.5 million in the tiny Farmington State Bank, which now does business as Moonstone Bank in Washington State. That's a significant sum, particularly, get this, for this bank, which has about $21.7 million of assets as of the second quarter and has only about $10 million in deposits for most of the decade. So this is extremely small for a bank and would be considered small on credit union standards. Article goes on to say that revelation has spurred questions about FTX's reach within the banking system. And Sam Bankman-Fried's, or SBF as he's been known to be called, plans for it in the future. Previously thought to be insulated from crypto turmoil, bank regulators, including Grunberg, have told Congress that their caution towards the crypto market has helped keep the traditional financial sector safe as crypto markets whipsaw. Grunberg, in a press conference issued after the release of the agency's quarterly banking profile, said that the FDIC and the Fed are scrutinizing the Farmington situation. He's also considering other ways FTX might have ties to the banking sector. There's a lot of review as well that's going on with FTX, Grunberg said. We're learning more about the operations of that company and whether there might be any additional connections to the banking system. We're not aware of them now, but there is a careful review ongoing. We'll see what it might reveal. It's unclear to what extent regulators were involved in Alameda's investment into Farmington State Bank. Farmington was acquired by a holding company led by Gene Chalopin, the owner of Deltec Bank, whose best-known client is the stablecoin issuer Tether in 2020. After that, it applied and was approved by the Federal Reserve Bank of San Francisco in 2021. Then Alameda acquired a stake of a little less than 10% in the bank, just below the threshold for regulatory approval. Just below the level for regulatory approval, trying to stay off the radar. In a press release, the bank said it has remained in close communication with our regulators throughout its business evolution and has built a robust processes, programs, and controls to ensure all of our activities comply with all applicable laws and regulations. It says that Alameda has only a non-controlling stake and that FTX unwinding has unfairly affected its reputation. That's why I opened with reputation risk. Reputation risk, as you know, is something that NCUA examines you on. The bank that has a $10 million investment in it by Alameda is indicating that they're being treated inappropriately and unfairly because they're doing everything by the books. They've built robust processes, programs, and controls to ensure all their activities apply with applicable laws and regulations. And I'm not doubting what they're saying. I do find it interesting that they stayed below the regulatory threshold and they only have a 10% interest. Now that doesn't add up. All right. You've got $21.7 million in assets and only $10 million in deposits, but you invested $11.5 million in it. So $11.5 million is 50% of total assets, and it's more than total deposits. So are they saying that this bank is worth $100 million if they only bought, well, let's see, 10%? 11.5 million divided by 10% would be 115 million. So they're saying this bank is worth $115 million because a $11.5 million investment was only 10% of its value, yet they only have $10 million in deposits. So in my 33 years in experience, I've never seen something astronomically valued like that, but maybe that's how things were played here at Alameda, at FTX. This is only chapter one of seeing who was tied to this, how they were tied to it. But if I was a credit union and I was considering offering apps for my members to buy crypto right now, I might pause that and I might reevaluate what it is I've got out there. Now, you don't want to throw the baby out with the bathwater as it relates to blockchain. And I think there's a lot of potential there. There's a lot of smart people out there that say when you separate crypto from blockchain, there's some really cool things that will be coming down the pike. But I wouldn't want to be the market leader on that right now. I've got some podcasts coming up where we'll talk about the difference between crypto and blockchain with some really cool guests that are experts and know far more about that than I. Suffice it to say, do you want to risk your reputation by linking yourself to crypto? I certainly wouldn't. And I think there's more information and more allegations and more losses that are probably coming down the pike as this whole situation unwinds and as people start investigating like the FDIC is investigating. All right, that's it. Mark Treichel signing off with flying colors. I hope you'll be back next time.
Thank you for joining us on this episode of With Flying Colors. Subscribe on your favorite podcast app to hear future episodes where subject matter experts of all varieties will provide tips on how to achieve success with NCUA. If you would like to learn more about how we assist credit unions, check out our services at marktreichel.com.